Hey everyone, Iamomeralikhan here. Now, having spent a decade navigating the real estate market in Dubai, where skyscrapers rise as fast as the desert heat, and now here in Canada, I've learned that every market has its rhythm. Today, I want to share some observations about what's unfolding in Canada's housing scene. Not advice, just insight from the trenches. So let's start with the basics supply and demand. Right now, Canada is seeing something unusual. Sellers are flooding the market early, approximately 11% more listings in January alone, the biggest jump in decades outside the pandemic. Normally, winter's quiet, but folks seem eager to act before spring. Why? Maybe they're sensing a window, lower interest rate, some economic clouds ahead, or just wanting to get ahead of the game. But here's the twist. Buyers aren't biting as fast. Sales dipped slightly by about 3.3% last month. It's like a dance where one partner hesitates. Buyers might be spooked by headlines like tariff talks with the US, job worries, or just waiting to see if prices soften further. Either way, patience is the name of the game. Now, Canada is not one market, it's a patchwork in places like Quebec, the prairies, and the Atlantic Canada. Things are buzzing there. Prices are rising steadily, sales are strong, and affordability is drawing folks in select areas like Edmonton. But in pricier regions like Vancouver and Toronto, it's a different story. Prices are flat or even dipping slightly, especially for condos. Why? Because these markets are more sensitive to higher borrowing costs and global uncertainties. Think of it like a luxury car, flashy but harder to sell in a storm. Now, what about the tariff, wildcard, and interest rates? Well, in my opinion, that's the elephant in the room. US tariffs uncertainty is here like a fog. It doesn't crash the market, but it makes everyone slow down. So if tensions escalates, job in trade reliant sectors could take a hit, hence shaking confidence. But remember, Canada's weathered storms before. On the bright side, interest rates are dropping, and the Bank of Canada cut rates in January, and more cuts are expected. For buyers, this is golden. Lower rates mean cheaper mortgages, and with more inventory, you've got negotiating power. Well, for sellers, I would suggest price smartly. The days of list high and wait are over. Now, here's the good news. We're in a balanced market. Nationally, there's about 4.2 months of inventory right between a buyer's and a seller's market. So, no frenzy, no free fall. It's a healthy reset. For first time buyers, this could be your moment because more choices, less competition. Investors looking at affordable regions like Quebec single family homes, which are up about 10% year over year, and sellers, quality homes still move. Just don't expect 2021 style bidding wars. So, wrapping up, here's my take. Markets move in cycles. Dubai has taught me that much about volatility, which is normal. What matters is adaptability. Canada's market isn't crashing, it's adjusting. So lower rates, steady demand, and a return to balance are solid foundations. Whether you're buying, selling, or just watching, stay informed, stay flexible, and remember, every shift creates opportunity. Thanks for tuning in and keep those questions coming. Take care.